All right. So how many people we got online? We got 8 people. Sorry about the delays there. So you guys can see my screen, no problem, right? Okay. This is our second webinar. I had no formal, nothing to present. So why don't we just get some questions out in the open here, and then go from there, like what we did last week. I know we got some new people aboard. My friend Dan will be on board at 7:30, and we should be able to get some sort of stuff all set up. Okay, who's got any questions? I know we got some new people here. Do you want me to just tell you what I've been doing for the last couple of days or what I'm about to do? Will that make life easier for you? I guess so. We've got some paying members here. Just so everybody knows, I just put my course live for the trading course up online 2 days ago. Some people have already tried using it. They like it. And it's hopefully all good if you want to learn about how to build a trading platform with source code examples, videos, and all that. Okay, so for those people that don't know, I'm going to be repeating myself a little bit. There is a book I have been reading or read a couple of weeks ago. It's C# in applications. Now, the reason I bring this book up is because I've got the source code, or will be getting the source code tomorrow for it, and I'll be moving full steam ahead with it. It's quite a powerful book which shows you basically from end to end on how to build a trading platform minus the data connection into something like IT Feed with interactive brokers, whoever your broker is. So I'll be moving ahead with that. Hopefully tomorrow's going to be a lot of Excel. Let me ask you, how many guys are out there doing Java? Anybody doing Java development? I just put up another article yesterday, or let me show you what I just put up here. Okay, the reason I say this is because I had a big scare on my computer, this computer exactly, just so people know what's happening with Java, the new Java 7. Let me just show you the article here. I don't know if you guys may have seen this. This happened this morning. Let me just pull it up right here. It's actually pretty scary. I have Dropbox on this system as well. Somehow somebody, a virus or malware, was able to do an automatic update on my JVM, the runtime environment for Java. There's this little mysterious file that ended up here called ttt.7z, ended up in my Dropbox. And apparently, if you go to this site, it was verified to be a 100% virus. And that ended up in my Dropbox. And I don't use my Dropbox a lot, and it gets kind of scary. So that was all due to this Java update. And also this Java update was an update of today. So I find it kind of funny how these two events happen at the same time. So my point is, I'm trying to stay away from as much Java as possible. It's not a fun situation to be in when you have serious development and you have these sort of things happening. So I'm just letting people know about that. That's probably the second or third time I've seen that happen on my system. There's been a lot of updates about the Java just breaches, like in banks, BBC headline news kind of thing with these JVM issues and stuff. Okay, I'm hoping. Okay, so that's Java. Let me take you to that book I was going on about. Let me just see here. Okay, so if I go to C# in financial applications, Daniel Duffy, who's the author. Let me see. There's a site called DataSim. Maybe it's I'll use the good old Google. This book is really good for in yeah, this one right here, this book right here. So this book right here is the one I'm reading or have read. It has really good source code available, and it's with an Excel front end as well, but you can hook into Excel. So it's something that you may want to check out. I'll put this in the chat box if you want to get a copy of it. And like I said, I'm just getting the source code as of tomorrow, I think. And you'll start seeing more example code of this, probably starting maybe tomorrow or Monday as I move ahead on that. That means I'll be strictly working on strategies now, and that's going to be my top priority. And here, I think Mr. New York City Contact had a question. Just so people know, there should be a box on the right, about questions. So if you have any questions, that's where to type them up. I know you guys are trying to raise your hand. I'm not used to that. I'm kind of trying to get used to this GoToWebinar software because it's different from GoToMeeting, which I'm used to. So as you can tell at the beginning, the audio delays. They've just been not too good in the last week. Anyway, so beyond that. So I'm hoping somebody asked about what's the title of the book again. I think, as I said, I did put it in the chat box. So that is the book that I'm reading. So that's what I'm going to be focusing on probably a long time, to be honest, because C# is my chosen language to do development in. And I've done a whole whackload of postings on why C#. I see people are asking questions, but I'm just still trying to rearrange the time here. Okay. Okay, so some people have been saying some comments here. Okay, we got a comment about the book. Comment about iPad. Can you see my question? Paul, let me just give me a second here, Paul. I'm going to try to look for your question here you had about, I can't see, but the system seems it's waiting for you to start. Okay. So can everybody see me okay on the screen here? I just want to make sure we get started. I'm just looking for any questions. Eric asked about SAS or SQL development. Eric, if you could repost your question. Not sure how you mean by SQL development. If you want to know how I see things with SQL, let me just take you over to the SQL Server. Yeah, let me just, I'll show you the new SQL Server 2014. We did talk about this last week, but the thing that I'm really excited about with this new version of the new SQL Server is the in-memory database component. And that I'm very excited with because that's probably going to change things on how you can do real-time analysis and so on and so forth. And I've got lots of videos on my YouTube channel for that about what my opinions are on SQL Server. But I'm waiting for that to come out. So if you got any specific questions, just let me know. Okay, so, okay. Paul, any of the group members into artificial intelligence? If anybody wants to respond to Paul's question about AI, yeah, that'd be awesome because I know he's got some heavy interest in AI. I know we had one person by the name of Leonard Kwan. He was totally down with AI. Actually, that was his background in robotics and AI. Eric asked more specifically on SAS or SQL development in relation to cloud development and computations. If you're asking me if I'm going to do cloud technology with SQL, maybe for development, but if I go into a production environment, I will not be doing any, releasing any code into cloud at all. I just don't trust it. It's just something I'm not really, I just like to keep everything either local or private. There's a lot of sensitive stuff I've started doing in the last couple of days. Gary says he can't see the screen updates anymore. Can everybody see my screen updates? I've got my button clicked here. It says I can see it. If you have any complaints. So does that mean you can't see it, Sandra? I only can hear. Really? This is bizarre. Okay. Hang on for a second. We got GoToMeeting going crazy again. Hang on. Oh, I'm in pause mode. Show what? For some reason, screen is paused. Screen. Hang on. Can you see my screen now? Okay, you guys can see my screen now? Just let me know if you can see my screen. Okay, good. Something switched there. I have no idea what happened there. I'm sorry about that. So what I'm going to do is go to webinar. Okay, so I'm going to go back to some of the questions here. Let me just see here. Okay, I got Paul's question. Okay, you got the book covered. Not updating anymore. Eric, let me know for you, Eric, if I've answered your question about SAS or SQL. And I'll see what I can do there. Okay, Ray said he resolved the screen issue. Okay, it's updating now. Anybody else got any questions? Let me know, Eric, if I can answer your specific question on SQL or SAS for cloud technology. I mean, I believe in cloud, but I just believe in private. Ray asked, why not just develop strategies using NinjaTrader or multi-charts, particularly using like C#? I put up a video on that with the amount of restrictions. Let me just pull up the YouTube video on that, and I kind of explain it at a non-techie level why I don't like retail trading platforms. Sorry if it. That's my. This one right here. I'll pause it as soon as it plays. Hang on here. Hey, this is the video I just posted yesterday about that. In a nutshell, what I don't like about retail trading platforms is a few things. Here is there's two things. Well, a lot more than that too. But first, you're tied to one broker and one broker only. I like to have source code to everything, so I have full control of everything, and that's just two major issues I have with retail trading platforms, and you're really limited. But when you have your own platform with source code, you pretty well have full control on everything. It's just something that's what I believe in myself. And I mean, you could use platforms like what's called TradeLink, which is good. But again, trying to reverse engineer those type of platforms is just as complicated as trying to run a retail trading system, which is going to have a lot of bottlenecks and whatnot. Let me know if I answer your question, Ray. Eric asked, "I'm good now." Okay, you can see everything. Great. And here I'm just queuing some of these questions. Are moving pretty fast. Okay. Okay, so you're good now. I'll have something more specific. I'll pipe up. Okay, that's from Eric. Okay. New York City contact asked about, can you talk about the model you'll be using and the instruments you'll be trading? Like I said, Mr. NYC contact, I'll call you NC. Is that cool? Yeah, like I said, I'm going to be forging ahead with the that book, the C# and financial applications. I'm going to be digging through that, looking for anything other than fixed income. It does offer some options type of strategy, so I might play with those at the beginning. But then in the other book, let me pull up that book as well. It's called, what's it called? Sorry about this. Trading Systems and Methods. That's the one we're looking for. This is by a guy named P.J. Kaufman. Now, this is the book I'll be heavily digging through. I love this book. And honestly, it's one of my most favorite books yet. The problem with it is the source code is in TradeStation, but actually it's a good exercise for me to sort of translate the code from TradeStation Easy Language into C#. So that's what I'll be attacking. There's quite a lot of examples in Forex, so that's what I'll be focusing on, Mr. NYC Contact, and I'll probably move through those pretty fast, hopefully. And let me know if that doesn't help you out. Paul asks, are you using any tech indicators for trade signals? For you, Paul, yeah, this book does have a lot of indicators as part of the examples, moving average, Bollinger, all that classic stuff. Also has some more advanced stuff if you want to use like Kelman filter and some other funky stuff. So it's a really good book to just from a general perspective on all the different types of strategies out there that are available. Plus you get the source code, and it walks you through the source code as well. It's one of the only books that I've seen that does that. And that's one of the reasons why I love this Kaufman book, the Trading Systems and Methods. So Kuz asked about actual trading. He's one of my members. He's been with me for quite a while. As you know, Kuz, my whole idea over the next couple of months is to basically build these models with a real trading environment using real-time data with IQ feed and just run them and test them. And I think we've gone over about some of the testing, forward testing and back testing I'll be using to verify the data against certain strategies. And I'm not only going to be just focusing on Forex, but I'll probably be looking at equity as well. So that's part of the strategy I'm going to use, is probably focus mostly on Forex specific strategies, and then start looking at equities and trying to see if there's some strategies I can use that can be used for both asset classes, because I've done testing before where you can have one model looks good when you're using it against Forex, but when you try to apply it against equity, it just bombs, or vice versa. So there's different models for different instruments. But that will lead me to, I'm assuming you mean live trading. Basically, my goal is to go through this whole entire exercise. I think it's going to take me a good couple of months to go through that. I'll be posting that code in my new membership. I'll be posting that or starting that up probably next week sometime. And then from there, like I said, it'll take me a couple of months. Then I'll reassess everything and see what strategies works for me, under what circumstances, and then start live trading with them. So that, as I said, is going to take me a good couple of months. Yeah, so I guess Kuz is referring to mad trading scientist. Honestly, I've never heard of mad trading scientist. Yeah, if you want to be more specific, or I could put you on the mic there, Mr. Kuz, if you are interested, and I can. You want me to bring you on the mic? Just let me know. I'll do that if you like. Anybody else got any questions? Because I think we've covered quite a bit here already. It's 7:30. Okay, Kuz is setting up his setup here. Anybody want to go on a mic and ask a question? If you want to ask a question in the questions box, what I'll do is, if you want and you're ready, I can bring you aboard, and I can bring you in via voice if you got any really specific stuff. So if you're not shy and revealing your voice, let me know. That's cool. Just wait for some more questions to come in. So again, that's my goal for the next couple of months. Start playing around with just, not I won't say popular models or forecasting types. It just right now, as anybody really knows, man, any aspect that I'm really weak in is really on the math side, because that's not my formal education. I consider myself, as I told Mr. NYC Contact yesterday, my math is the equivalent of 1 + 2 = 3, or 1 + 2 = 4. That's my math skills. Not that bad, but compared to a lot of the people out there that are PhDs and stuff, I'm kind of a fuddy-duddy, I guess, when it comes to that. Who's got questions? Let me know if you're ready, Mr. Kuz, and we can bring you in for a more interesting discussion on that, because I know that's something that a lot of people have been waiting on me to do, to get actual live trading. Monte Carlo simulation for Mr. Paul Cottrell. Not yet. We had somebody by the name of Lennon Quant who doesn't believe in Monte Carlo. I think for my setup, Monte Carlo, it will be useful because it's just so the computational power that's needed for Monte Carlo is pretty intense. I haven't really gotten into that yet, but it's something I know of and probably may need to look at down the line. Ray asked, forgive me if I missed your previous discussions post, thought you were looking at HTF stuff, and why now TA, technical analysis from these two books. Okay, the two books, there is quite a bit of technical analysis, but the Kaufman book does have some statistical type of analysis, as well as some, again, I don't know what people define as quant. In my mind, there's some quantity stuff in there, but the reason I like that book is because it's a good starting point for a guy like me that has a struggle being able to build an algorithm first of all, and then being able to code it up and make sure I do it right. So that is why I'm using that book. There's a number of reasons as well, because when it comes to trading, you got your technical analysis style or analysis. Then you have your quant, and you've got your fundamental sentiment, all that. But as the NYC contact and myself have extensively talked about, we like to work on really pure statistical type of models or really pure mathematical and proven models. Yeah, so that's that. If you want to chime in, Mr. NYC contact, on that, let me know as well. Let me know when you're ready, Cruz, and then we can bring you in if you want. Okay, so Paul Cottrell asked, Lennon Quant, you should read Stochastic Simulation Applications in Finance and MATLAB. Good for MCS. Yeah. The thing is, right now, I've been bombarded with a bunch of books, and it just delays me. So I'm just trying to get stuff done now. And then, as I said, consider me coming out of grade 3 math or something. I'm very basic. My skill level will be able to pick up quite quickly as I dig into it. And once you get pulled apart in different technologies and other stuff, you start to lose that momentum, and I don't want to lose that momentum anymore. So I want to make sure that I'm up to speed, and I just want to focus now on models and not get distracted by other books and stuff. But I do appreciate the book mention. Let me see if I can. No, I can't copy that info that you just told me about. So I'm sorry. I wish I could let other people know about that book. But here I'll repeat it. It's called from Paul Cottrell. Stochastic Simulation and Applications in Finance and MATLAB. Great for MCS, Monte Carlo Simulation. Okay, so NYC contact is, what process will you use to pick your first trading model? Let me go back to the computer here. There is a survey I've been running for quite a while. And what I did with a book from Irene Aldrich, I went through it, put up a survey of all the different types of models out there that can be used for so-called high-frequency trading. So here they are. Here's the results. And basically how I'm prioritizing everything is based upon the popularity of these type of models. So obviously start with moving average, pairs trading, so on and so forth. So that's how I'm planning to do that. Here, echo here. Hang on here. Just give me a second here. But that's how I'm prioritizing the models. Looks like I'm going to have to put somebody on mute. I think I know who it is. Hang on here. Okay. You guys can hear me still, okay? Just let me know. Okay. So Kuz asked about modulus FE. That picture is in front of my house. I'm not sure which picture you're referring to, Paul. NYSE. Okay. Well, you look by the NYSE. Okay, there was a comment about modulus FE from Kuz. Kuz, let me know if you're available. Are you? I'm going to unmute you. Kuz, can you talk?
Yes, I can talk. Can you hear me?
Okay, yeah. Everybody,
It works.
Kuz.
Hello, everybody.
You're Amsterdam now, right?
I'm in the Netherlands in a small place called Beeldhoven. Yes, I'm back
Yeah, I'm
from
glad to
China.
see you're out of China because you wouldn't have had internet today.
Yes.
8 hours.
Nah, it's working great now.
Anyways, okay. So you talked about modulus FE.
Yeah, somewhere I found this website, Modulus FE, and they provide source code
Yeah.
for all sorts of trading.
Yeah.
I wonder if this is something which could be useful.
Yeah, I've looked at this company. I've actually talked to the CEO, Richard. I think it's Gardner. He's got a product called MQ4. There is it. M4. That's it. It's a really it's a great platform, and you do get source code with it. I have gotten source code with it. I've never really gotten around to playing with it. But it's $15,000 for the source code arrangement. It's a white label source code arrangement.
Mm-hmm.
So it's pretty expensive. But again, the difference between this and a trade link, if people got $15,000, it's something I would kind of play with. But compared to the platform that I've got, mine's a lot simpler than his. His has great charting. It has a really good API. I mean, it still has its limitations, but for what it is, it's quite good actually. But I'm hoping that mine's just good enough for the basic stuff, and I'm going to proceed with it. Everybody, I'm going to try to help people out with what I've got. Yeah, you were part of the workshop, remember, Kuz? Oh,
Yes.
Yeah. I mean, like, all the basics are there, wouldn't you say, for all the data acquisition in real time and submitting orders and stuff? I mean, that's what it really comes down to, right?
Mm-hmm.
Yeah, I guess.
Okay.
Yeah.
Okay. Yep. Okay.
Do you have any other questions, Goose?
Not for the moment, no.
Okay, I'm going to put you back on mute if I'm not here to...
Yes, please.
Okay, will do. Thanks, man. Okay, so New York's... Anybody else got any questions? Which performance metrics will you use? Which trading... Okay, let me just read this properly. Which performance metrics will you use to determine which trading model performs the best? Okay. If you watch the webinars on let's say I think I've referred these a lot, MATLAB automated trading webinar. There is a really good breakdown on how you can do back testing. This particular one from Stuart Kozzola is really good, and you know, you just do the standard data series. You run your model against the I can never speak properly here. Yeah, so you take your last 80% and you do a test on that, and then you do a forward test with the model, and then of course you'll have the real data and the real data, and you compare the results of your forward test with the model, and then you compare that against the real data. If that makes sense, that's how I'm planning to do it in a nutshell. Just wish I knew the proper language and how to verbalize it. Yeah, let me get you the link, Mr. New York City contact. Yeah, there. Let me just get that for you. This is one of the webinars. There's a bunch of webinars. Yeah, here. Okay, that should do it. It's in the chat mode now, on the chat box. Paul asked, do you think your platform could capture the spread difference in the WTI futures are open? It's 11:30 a.m. and the spread difference in microseconds. Microseconds. It depends, because I had another member ask me about the data that's provided from IQ Feed, because you can watch it on a sub-second level. in ticks, and then you can build a model within, let's say, C#, and then be able to test and calculate a spread. Yeah, you can use that definitely, not just based on how you code up your trading logic within the C#, or you can do the same thing in MATLAB and then just code generator, or run the C# application and call it a MATLAB.NET assembly that you can generate from within MATLAB. So there's a number of options that you have available. So yeah, you can do that. Just depends on how you code that up in C#. It's not as easy as it looks, but yeah, you can definitely do it. Okay, Paul's got, I have a calendar spread, the oil and natural gas futures for risk management. Yeah, you can definitely do that because with IQ Feed you can watch as many assets. I think, no, actually you can watch up to, is it 500 assets with the basic account in IQ Feed, but let alone, I don't know anyone that even watches more than 100 assets at once. So you can watch and listen to the market and then have your, if you follow the trading course that I've got, walk you through a queuing system. So you can set it up and say, I want to watch this, and send the data into your, call it a model, and then you have your trading logic listen to that data, and then it will raise a trigger based upon some kind of calculation or algorithm that you see or indicator or whatever. But yeah, it definitely can be done. I don't know. Risk management, again, those two books I gave you cover that. There's a couple of chapters in each book about risk management. Obviously, you're going to tie it back to Excel, but you can also tie it back to MATLAB as well. And I've seen some examples of scripts in MATLAB that show you how to do risk management. But again, everybody has their own definition of what risk management is. Paul's followed up with another question. Do you have any code to dynamically update surface volatility? Now you're talking about within a chart, or you might be getting a little too mathy for me, Paul. I know you got a PhD. Are you referring to within a surface plot? Maybe option market. Okay. No, I don't have any code. If you want any code, I can give you a good site to see if they have it. It's called quantcode.com. A lot of people don't know about this site, but it's not bad. And it'll have all the code that you want. Has .NET code, Excel, C++. Let's say I'll do a search for surface volatility. Oh, great. There you go. A crash courtesy of my Internet Explorer. That's funny. Anyways, let me try another. Well, let me just try it. Go to quant code here. Quant code. Oh, wrong site as usual. And I'll do a search for surface. Ooh, it doesn't like this site. Strange. Okay, I'll try out my Firefox. Give me a second here. Quantcode.com. This is a good site for examples. Oh, for 3D plot. Okay, let me just see what we have here. Surface volatility. No, it doesn't look like it has it. Okay, for a surface plot, there's two options. Let me think here. I've not done a 3D plot, but let me see what we can do with DevExpress, because DevExpress is a charting package. It's the one I plan to use or will be using. Let's see, DevExpress surface chart. 3D surface. Can it be done? And the answer is no. I don't know. I'm sure that they have surface plots, but here looks like there's a project that enables that. Yeah, they do talk DevExpress for it. So that's something I'm going to look at, I guess, because that's something I plan to do. Another option is you could use MATLAB for it, build a MATLAB function, and then generate a 3D surface plot within MATLAB itself. You can't code generate, I know that, into C++. You can't do that. But what you could do, if time is not of an essence in this situation, what you could do is code generate, or sorry, you could use the builder, MATLAB Builder NE, and then you can have your C# application talk to that MATLAB script that will then call your 3D plot. If that makes sense. It's probably one option you could use. I know that can be done. I've done it before, actually. And that's called MATLAB Builder NE Toolbox for Builder NE. And then I know it's 100% compatible. All the functions are available in MATLAB with C#, and then you just call it. And then you have the Builder NE. Actually, I can show it to you. What am I saying here? Hang on. I'll pull up my MATLAB. MATLAB is very cool, and I'll show you how you can use the Builder NE to build your surface plot. I'll just show you the Builder NE process. I've got videos on this, but I can do it live. There are no problems. Give me a second here. MATLAB can be a beast. This is a 2013A version. I'm sure they'll be bringing out a 2014 version soon. Anybody got any other questions in the meantime while I wait for my Wunderbar MATLAB to load up? This could bomb, actually, because MATLAB, as I said, is a beast to load up. You guys see the MATLAB screen okay? Or the MATLAB splash screen? Just let me know yes or no. Okay. People can see it, yeah. Oh, Paul wants to talk. Hang on, Paul. Yeah, no problem. I'll bring you in. Hang on, Paul. Okay, Paul. Oh, hang on, Paul. Paul, you are... Hey, Paul, you out there? If you can talk?
Hello?
Hey, Paul.
Hi.
Hi. Welcome.
This is some great information that you're providing.
Oh, no problem, man.
What I have noticed in my trading, because I'm a proprietary trader, I've been doing it since 2009.
Okay.
Primarily in the currency market. I started in equities, but then went into currency because of the leverage, and then also went into the futures market. That's why I was asking about the oil and nat gas futures.
Okay.
But what I have noticed is there are no systems, at least at the retail level, that are graphing the changing dynamics of correlations between assets, because if you have a lot of assets in your trade book, those certain systemic risks could evolve through time.
Okay.
And by having a system that maps out these correlations that are within the trade book, and taking a look at the volatility of those assets, having that somehow 3D graphed, something similar to that fast action charting that I saw. Something like that, where this 3D plot of a strike price of the option of whatever you're trading, using that as some sort of metric or a proxy of what the spot market's doing.
Okay.
Taking a look at, my point is that taking a look at the strike price of that option, taking a look at the changing volatility and the time decay, but that surface is changing. It vibrates. You do that when you do it in MATLAB. It's a static surface. What we're really talking about is 4D, where it's morphing, because when you're trading, the price of the option is changing, and so is the volatility.
Right.
But the time decay within that day hasn't really changed.
Right.
So this surface, this 3D surface, normally if you go on the Bloomberg terminal and you type in, give me a surface plot of volatility,
yeah.
It's static. I haven't seen anything where it's actually 4D, where the surface is vibrating, because that vibration is a signal, at least I think, is a signal where, well, it's possible that more volatility is going to take place, and when more volatility takes place, then that opens up more opportunity for trading, for traders to make money or lose money. But I mean, you see the point that this could be actually a method to listen to the harmonic of the market.
Right. See, the problem is I'm trying to load up a surface plot for you. I mean, it's going to take me a while to load up data and all that sort of stuff and then plot it. But you can set up MATLAB where it will listen to the market on whatever asset you're wanting it to watch. And then I've seen it where you can plot it, where it will plot and react in real time based upon the data. So I know that possibility can be accomplished. What you would need to do is you need to write a script, a MATLAB script, that will basically then be able to. What you do is, I'm assuming you're going to use Windows, right? Yeah. So let's say if that was the case, just give me a second here. Here we have a .NET assembly. So let's say I have this Ernie Chan test, and it's basically got some MATLAB M script files. So what I can do is I can build what they call a MATLAB DLL basically, and then I can have my C# call that MATLAB code through this assembly process. And then what I would do is I would have my C# application listen to the market, and then it will constantly send out calls to this MATLAB function, let's say if it's a surface plot, and then be able to consistently update it. The problem is that MATLAB, like how frequent would you want your surface plot to be updated? Like every minute,
I would read minute data.
Okay, it can be done definitely in minute data, but on a sub-second, yeah, you saw that video. You would need a package like that where it's very fast and be able to keep up with the refresh rate, because the ticks that I've seen in some of the assets can be up to 300 ticks in 1 second. So you need some kind of library package or that can keep up with that amount of data in real time. And then you also need basically a system that the processor is able to keep up with it as well. That's in real time, but it can be done. But again, I'd have to take a look at it. Actually, I have Dan here online. He's I guess you could call him my MATLAB expert, or he's coming online. Oh, yeah, he just came online. Hang on here. Dan, if you could let me know in the questions that you're able to go online and you want to handle that question. It's for surface plots. If you know MATLAB can keep up with real-time updates with surface plots, especially 3D. Let me know if you can in the chat mode if you can if you're able to talk and address this question from Paul. He may have just come online. He may have missed the question. Hang on. Actually, you know what? We got some other questions, Paul, and then if we can get back to that in a bit, and then I'll see if I can get Dan to be able to handle that question for it, because he's really good in MATLAB. He does it full time as a job.
Okay, no problem.
Okay,
thanks.
I'm going to put you back on mute. Hang on, okay?
Okay.
We'll get back to that question, or just ask it again. Hang on. Next question. I'll ask it though. Hang on. I'm just going to get back to where I was before. I know we got some questions here. Okay, so Ray asked, can you? Yeah, it's okay. He's commenting on the splash. Oh, it's only one question. New York City Contact asked about, in case of viewers don't know about, okay, he's got a blog, the NYC Contact has got a blog on his, he took the quantitative finance study the CQF program, and he's blogged about it. He's studying about the program. He's got a whole Facebook page around that. Mr. NYC Contact, do you want to type that out in the chat box, actually, because I can't copy what you've listed here and put it in the chat box so everyone can see it, unfortunately. You want to type it out? Because it's on the Facebook / Quantitative Finance Study page. No, I can't. Funny enough, I can't copy that. Oh, hang on. I think I got something here. Yeah, I can put it up in my browser. So he's just doing a little plug on this. It's cool. I have to log in. Yeah, I'll put it in the chat mode for everybody. Okay, so I put it in the chat mode, and that's Mr. NYC's study page on Facebook. So if you want to check that out, it's kind of cool. He's in collaboration with some other cool people from his program. I kind of like that. And he's the guy who provides a lot of content on my site. You know, without him, a lot of people wouldn't be seeing for the last couple of weeks. Half of the stuff is coming from him because he really digs into some really cool stuff. So he's a big asset every day. Me and him talk quite a bit. Let me see if Dan is available. I'm going to unmute you, Dan. Dan? And he self-muted himself. Dan, if you can unmute yourself, because I see you're muted. So you can't talk. Maybe he's in an environment he cannot talk. Who knows?
Can you hear me now?
Yeah. Oh, there he is. Dan.
Okay. Hi,
Okay.
guys. Okay,
Dan?
so going back to Paul's questions.
Yeah, go ahead. Yeah, we can hear you.
Okay. So Paul, it's an absolute valid question. Now, there are good news and bad news. The bad news is MATLAB it's a bit slow, right? I see your point in the benefits of having a 3D plot of volatility or whatever asset you trade. Now, having said that, the things can be done not necessarily at the CPU level. Those things can be implemented in GPU or in a different fashion at the hardware side. And keep in mind that we don't have to have a live view how the surface actually goes up and down. You can actually plot every, let's say that you're interested in ticks every minute. You can plot the surface of the residuals, what happened before. So you don't have to have that type of animation, right? Because all you need is an indicator for you to see if the volatility is above or below 40.
Do you want, here, I'm going to bring on Paul as well. Paul, if you want to, I'll mute you as well. Paul, you out there? Oh, he's muted himself. Paul.
Yeah.
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 If you want to address that with what Dan's talked about.
No, that's an interesting way to handle it, is to either plot residuals. There are indicators, lower indicators for charts that are measuring volatility.
Okay.
But I think that they're not as accurate as what I'm thinking here. You know, I know Paul Wilmot wrote a lot about don't believe in correlations and don't think that you can really measure or model volatility.
That's fair. I was going to ask you if I don't want to go maybe to specific questions. If you in your trading strategy do you really count for correlation?
Well,
do you really look at?
Well,
it was just an example of that.
Yeah, yeah. Now, when you're in the spot market in currency, it's not really easy to hedge. The only way to really hedge in the spot market, not in the future or options market, but in the spot market, is to find other currency pairs that are trading at that in a similar time frame, have a certain correlation. but those correlations break down, and that there seems to me to be some sort of causal relationship between correlation breakdown and increase or decrease in volatility. And it's cyclical. So there's some sort of harmonic that's going on here. So what I was thinking was, well, there must be a way to measure this changing volatility and two other parameters.
I hear you, I understand.
And map this thing in a three-dimensional way. Because we as humans have evolved to think in a three-dimensional way.
Yeah, that's absolutely fair. And the beauty of 3D surfaces is the fact that you plot in 3 dimensions, you have two variables, right? So I see the benefit of that. But the questions to you is, for example, I understand the correlation plays a role, right? But sometimes, as Wilmot pointed out, maybe it's tricky. But instead of this, let's say, to hedge against your trading strategy, will you be better off to trade VIX, for example?
No.
Actually,
remember what the premise was. You're in the spot market, and let's say you put a position in the Euro USD, all right?
Okay.
And you're long, and you have in your investment policy statement a no loss provision. That means you do not sell, even if you're losing money. So the only way that you can kind of manage this risk is to find something that has some sort of correlation, and you keep on listening to the volatility of the difference of those two as a measure of hedging error. And typically, hedging error will change when volatility changes. Now, the correlation is kind of a proxy for the delta hedge.
That's fair. That's absolutely fair.
So as the correlation's changing, you might have to adjust somehow other positions to try to get to a little bit more theoretical delta neutral.
Delta neutral, yes.
But it's not using the Black-Scholes model to figure out the neutrality of it. It's just using correlation as a proxy.
Okay.
How much of one asset do I need to hedge the risk? But it breaks down because it's not the underlying, right? Because if I took a Euro USD spot position, yeah, of course I could buy a 3-month out future,
right,
and take a short position in it. Well,
sure. So this is what I had in mind.
But in that case, I have a expiring contract where I'm going to take a loss eventually somewhere.
Eventually.
Yeah. So it doesn't fit the no loss provision on the IPS.
Yeah, that's fair. That's fair. I see what you mean. So you're looking for using correlation to actually dynamically hedge against your position.
Correct. Right. And my thinking and my research, my dissertation research is on this. It's listening to signals, and the signals that I have been seeing lately is that the signals are in volatility between asset classes or between things that you're trying to hedge with, and listening to the spreads on the LIBOR to some other method, like the overnight lending, or a particular bond curve. And when you listen to those, that's why I was talking about the artificial intelligence. If you're listening to these things and you have some sort of 3D graph that's dynamically changing, it gives you a signal, and adding some components that Brian's building up, you can almost create an automated trading situation that as volatility is changing, you're dynamically modifying your trade book.
All right. Yeah, that's fair. That's fair. But for example, going back to Black-Scholes model, do you think that estimating the volatility from Black-Scholes dynamically it will not be good enough? You still, I
agree with you. The Black-Scholes in its pure form is garbage. It's garbage.
Exactly, I agree.
It's garbage because
absolutely.
the assumption in the Black-Scholes
The assumptions
is
are
that
wrong.
volatility is constant. Well, we know that through this whole conversation that volatility is not constant. But the thing is that by using the Garsh models, which is probably the closest band-aid that quants have as a good tool, is to use some sort of Garsh type model, you know, and I've seen the research that I've seen is that you want like a 20 period a window to, you know, to parameterize. You know, so when Garsh is calculating the volatility for that 20 point period, then that's what's plugged into, you know, your pricing model. You know, your Black-Scholes model.
Yeah.
I personally are using the Levy process, which is the Black-Scholes.
Oh, Levy's the stochastic process is probably more, it's closer. Levy's stochastic process probably describes better.
Yeah.
Better description.
No, I agree.
It's interesting that you...
No, I agree, because, you know, another way to model it, you know, of volatility is, you know, stochastic volatility modeling.
Stochastic volatility, this is what I had in mind, yeah.
Yeah. No, but I mean, many different ways. But the thing is that you could have multiple ways of calculating the volatility. And you could have a matrix with some weight that says that I give a certain weight to the Garsh method, and I give a certain weight to the, you know, stochastic volatility method. And, you know, if the stars align a certain way, execute the trade.
Yeah, that's fair. That's absolutely fair. Yeah, again, for me, when you brought up the question, I saw the benefit of plotting the residuals. At the same time, I haven't captured at that time your point of correlation, but now I understand clear. It's better. It's understood.
I did some pre-dissertation work, and one of the books that I found that was very interesting that kind of gave me this idea was Dr. Tell's book on dynamic hedging. And he goes into detail about correlation matrices. And these correlation matrices change, you know, over time, you know, through the trading day.
Right.
And, you know, if you have a large trade book, you know, and you're looking at your screens, and it's a volatile day where, you know, VIX is normally trading at 20 and it jumps to 25, your stomach starts falling out of, you know, because the volatility is affecting your trade book so much. And that's kind of what started this, you know, because I started trading in 2009, so, you know, volatility was extremely high then.
Right, especially
you know, the 40s, 50s.
It was
so,
crazy,
you know,
yeah. Oh, I think it went, it
so
went beyond that, right?
So between that and reading Dr. Tell's book on dynamic hedging, that kind of led me in this direction that correlations and volatility are a piece of the signal to find out endogenous risk within the system. So that's why I asked the question, because what Brian showed in this fast charting visualization is kind of like what I'm thinking. It's a little different, but I mean that speed and the telemetry. You know, it's almost very similar to the telemetry on a Formula One car. You know, a Formula One car has lots of different components and lots of different telemetry, and you know, it wants to tweak the system. You know, the engineers want to tweak the system by reading all this data. Well, the market is really no different than a.
It's no different. It's a time series. At the end of the day, this is what it is, right?
Yeah.
Yeah.
I mean, what Brian was showing in that fast charting is kind of, you know, it's telemetry of the market.
Yeah.
Yeah, it's a pulse of the market, right? It's really, yeah. When you refer to dynamic hedging, to the book, Dr. Taleb, to Managing Vanilla and Exotic Options book?
Yes.
Okay.
Yeah.
Okay.
If I got somebody else who wants to chime in, New York City Contact. He's quite a mathy guy. I'm going to unmute him. Go ahead, Mr. NYC Contact. You want to chime in there?
Okay. Can you guys hear me?
Yes.
Yeah.
Okay. Hi, Paul. Hi, Dan.
Hi.
Hi, Brian. Hey, so Paul, what you were talking about is actually really interesting, but I was wondering, you're going to have to run these correlations in real time.
Exactly.
How many correlate? Huh?
Exactly. Yeah, you're right.
Yeah. So when you run these correlations in real time, I'm sorry, there's a lag here, so I think we're overlapping each other a little bit. I apologize for that. What exactly? How many correlations are we talking about? Because it can get very intensive pretty quickly.
My trade book, my proprietary trade book, is typically has about 10 assets in it. So it's a large matrix.
Right.
So it's a 10 by 10 matrix?
Yeah. Well, I mean,
Okay.
yeah, yeah.
That's not that bad though, right? I mean, the cross correlation, so you'll have to compute the cross correlation between them.
Right, right. So it's even larger than 10 by 10.
It will grow, right? So it's 100 by 100.
Yeah, but you know the thing is that sometimes I don't know how fast these systems could, what's the limit? Maybe the limit is only 4 in a trade book.
Oh.
And then and once you hit 4, the performance is 25% less or whatever. I don't know what it is, but right now how I do it is that I'm updating my correlations not in real time. I'm updating them, by the end of the day.
Yeah.
So I'm looking at a snapshot by the day, and I'm thinking that I'm losing a lot of opportunity because I'm not seeing dynamics throughout the intraday.
Mm-hmm.
Right, you're right. You wouldn't be able to take advantage of the 20 flash crash just by daily. So being that is that situation, what would it take? What kind of power would you need to calculate a 100 by 100 matrix correlation in real time? Any idea on that?
I'm sorry. There was a lot of feedback. I missed the
What
question.
What he wanted to know is
Very noisy.
what I think he said is like, what would it take to measure a 100 by 100 matrix?
Well, what kind of CPU would you need? What kind of CPU?
Yeah, what kind of CPU?
Would you need?
Well, you know what? I don't know. I mean, Brian, I'm pushing the limit on this. I don't know.
Okay.
Just
curious.
Paul, again, Paul, I wouldn't be concerned that much of speed from that perspective because those things can be easily sped up on different type of hardware.
That's right.
The thing that I thought that was interesting is what Apple's coming out with the Mac Pro, with this 12-core processor type stuff, but then also parlaying it with the, I forgot the term that MATLAB uses, but it has this multi-processor type.
Parallelizing.
Right. Having those two together, you have multi-core processor plus the parallelizing routine in MATLAB seems to be one of the possible solutions to this.
Yeah, that would be.
Yeah, Paul. Actually, it's interesting because your point regarding correlation, probably Brian, going back to our stuff, probably we can give you an idea soon because we are not looking in correlation, but we're looking in co-integration of two assets.
Right.
So,
exactly. You have correlation and then and co-movement. Yeah, right. Right. So I mean, you have you can still have high correlation, but your co-integration is breaking down.
Yeah. Right. So we can probably get a feeling of how fast things work with this MATLAB soon, probably in a couple of weeks, and we can give you some feedback because when we'll do the co-integration, hopefully we'll do on the portfolio of assets. So we can give you an idea of how long it takes us to do co-integration for this. We can give you a feeling about that.
Yeah, I mean, it's just, it's an idea that I saw while I was trading, and, again, the idea kind of was the trading plus reading Dr. Taleb's book on dynamic hedging, and I kept on starting to think, there's a signal out there that has something to do with volatility and correlations of assets. And I don't know if you're familiar with Dr. Sornet. He's kind of, have you heard the term Dragon King?
Yes, I have.
Right. So Dr. Sornet coined this phrase, and he's kind of like the maybe Dr. Taleb. Dr. Taleb is the black swan where, well...
The black swan. Mm-hmm.
Right, yeah. So in the black swan, you can never model risk. You know, you never know where it's going to happen. It's, you know, and you get smacked down. Well, that may be true if it's exogenous risk. But endogenous risk that's coming within the system as it's building up, SoarNet is basically saying we can model it. And it may seem like a black swan right now because we don't have the architecture or the tools to model it properly, so it seems to us as a black swan. But when we do provide or build up these tools, then that black swan turns into a white swan, you know.
So Paul, you would be talking like trade order imbalance?
Yeah. Well, I mean, that's part of it. That could be part of it. You know, another thing is that a lot of hedge funds blew up in 2009, even when they had really strong delta neutral type positions. Why? Because positions start trading together when there was a massive sell-off.
Sure.
That may have been anti-correlated, you know, negatively correlated, became correlated.
Right.
You know, so so I think there's something there. I mean, there's a lot of research that still needs to be done, you know, at the scholastic level, but also at the coding level. You know, some of the what's the routines that best can capture this, because these imbalances may be very quick. You know, like for example, when the futures market for the oil futures opens up about an hour or so before NYSE opens up, there's volatility in that market starts to pick up. But these retail systems, like I'm using Thinkorswim on my stuff, and Thinkorswim can't capture. I can't capture it fast enough the opportunity of the imbalance between the calendar spread that I have set in the oil market, because that opportunity is only like a half a second.
Right.
And the way the system works is I have to put a price in, not a spread. You know, and that spread could be at any price. So I can't really even put an order in. So I almost have to, you know, I have to watch the chart and gauge it and then hit it in a market order. You know, it's a fast reaction. So a system that can read that spread quickly and execute quickly, instead of executing based on a price, but is executing based on a spread change, then you know, a lot of opportunity could be there. Because all you have to do is just take a look at the difference between the forwards, you know, the current futures in the oil market and then the next future, you know, as a calendar spread, and just and graph out those two contracts. So you're seeing the difference of the two contracts, and you'd be amazed at what the spread is on that chart. But the spread opportunity is, you know, the spread candle is very big, but it's not there fast enough for to execute. It mean reverts, you know, back to a normal spread ratio very quickly. But maybe we, you know.
So let me understand that. I'm sorry, Paul, I just want to capture the intuition behind. So you're saying that by trying to model the changes in volatility by correlating those things, you expect to actually be able to catch that mean reversion from a high tick to low and try...
Well, there was two things going on here. One is building up a system that's fast enough to capture the spread change in the futures market. Because there are periods of time where the volatility in that market is very clustered at certain times of the day, especially at 8:30 to 9:30 in U.S. session. But also when London gets on board, there's also volatility in the crude market. Not so much volatility in during the Asian session. So that's one issue. The other issue was how do you dynamically hedge a trade book if you if you don't want to close a position out for whatever reason. You may have a no loss provision or whatever.
Okay.
And how would you gauge the endogenous risk that's building up in the system? I personally believe it's in watching the changes in correlation of assets and the changes of volatility. That's one signal. Like when on the trading floor, when I was starting to trade proprietary, they taught us you on our charts we had to have on the screen the VIX. Why? Well, the VIX is a gauge of kind of risk. So we were kind of as day traders we were reading VIX as it's picking up. Well, there's more volatility. There's going to be more price action. So that kind of I think that volatility and correlations and seeing how those things are changing is one piece of the endogenous risk that builds up in the system. I think the other piece is actually the lending rate between banks because they are such big players in the market and they have such large positions that if their lending
affect
rate,
a lot.
Yeah, so if their lending rate goes up quite a bit, or if there's stress, that there may be, and we saw this with the Euro crisis. The contagion, the contagion can be very fast, and I think that the system, as the market, I'm using the market in the world, the global market, has a signal. But what is that signal? And I think it's in correlation, volatility, and lending rates. But someone else might say, well, no, it may be something else. It may be, a full moon on Tuesday.
Well, I mean, that's why you have to have the statistics to back it up. You have to have some threshold levels that are statistically back-tested that you can rely on.
Right.
Exactly. Just so you guys know about the performance, Kuz is a hardware guy. He really knows his hardware. He came back and suggested I got it on the screen here, the NVIDIA Tesla parallelization boards for GPU. They're fully compatible with MATLAB. So that can be done on the processing side, no problem. And it's just basically one GPU, like a massive graphics card that you just drop into your system. These are about $5,000 to $10,000 a piece, but from a parallelization, you can definitely do it. And these are like supercomputers on speed on one board.
That's interesting you say that because back in my engineering days in automotive in the 90s, we had silicon graphic stations. And what was interesting about the silicon graphic stations was that the three-dimensional processing was on the card, and that was kind of the beginnings of it. And then they went into Cray computer type stuff, and the PC market came on board with this type of stuff. But but what we were doing was we were modeling cars in 3D and and building up the whole car and all the cross sections of the car. But no, I think you're right, Brian.
Well, Ray came back with a suggestion as well, like using. He says sounds like he needs algos burned onto a network adapter like FPGA to capture portfolio spread fluctuations in order to take advantage and placing lightning fast orders. Yeah, we've talked about FPGA, and you can do that through Simulink. So you could build like a Simulink model and then burn it onto an FPGA board if you really need that absolute critical, virtually no latency on the board itself. So there's numerous options that you can play with.
Yeah, but do you know anyone that does that?
No, but oh, sorry, go ahead, Dan.
Actually, I don't have experience. I work with NVIDIA, right? We port code from C to NVIDIA, and I can tell you that C++ to NVIDIA to CUDA. So the speed factor is up to 10 to 15 times.
Yeah.
So it's quite an amazing. It's a different programming language, sort of, but it can do amazing. You can do amazing things with it.
And if you go down the FPGA path, that's another world. That course, Paul, one the module in the simulate covers all that. So you'll see that in that particular module if you do want to go the FPGA route.
Okay. Well, I just just started your modules. So.
Yeah. It's all there. Just getting to it could take a bit of time.
Yeah. Right. No, this is a great conversation. This is a great idea to share, share knowledge.
Yeah, we're hopefully going to be doing this every week now to get more and more people involved. This is a really good one because, it's pretty advanced stuff, you know what I mean? But as you alluded to, Paul, about retail systems like with Swim or Think, and what limitations that you're seeing with that retail platform, is just another example of the retail of the limitations that you will hit with any type of retailing trading software. And that's why I think if you have your own source code, it's a totally different animal, as well as you start bringing in MATLAB as well as a tool to compensate.
Right. I totally agree with you. Yeah, totally agree with you.
I see it time and time again. If you're one of these guys that are just trading out of a piggy bank and you just want to do it passively, yeah, retail trading platforms are great. But when you're trying to do it on a more advanced level, you have to go down this path. There's no options. I'm going to assume that sort of helps you out, Paul.
No, I mean, it's an ongoing conversation now.
Yeah.
Through time.
Yeah.
I
don't know if anybody else has got any questions. You mind if I'm just going to mute you guys? Is that okay?
Yeah, that's fine.
Okay, hang on, guys. Thanks for the tips. So everyone's muted here. Anybody else got any questions or comments or anything? This is a really good one. We're already up to 8:22. We only lost one person, which is pretty good. Anybody else got any questions or comments? Gary's got a question. What's Paul's contact info? I have some contacts that can help with the FPGA implementation. There you go, Paul. Hang on, Paul. I'm going to unmute you, Paul. Is that okay, Paul, if you want to give out your contact, or you want to give it to me and I'll forward it to Gary?
Yeah, that's fine. Yeah.
Or do you want to share it?
Yeah, I can share it. I mean, yeah, no problem.
Yeah.
Just type it out.
Yeah, just type it out. Do you see the chat box on the right?
Everyone. Well, I'm on this. I'm trying the iPad app for this.
Okay.
So the only way I can type is through the questions section.
Okay. Well, when you got my email, when you forward me your email, what's the best way to reach you? Because you're on Twitter, aren't you?
Yeah, I'm on Twitter. I'm on Facebook. I'm on LinkedIn. I'm everywhere.
What's the best way for? Do you have a website that people can get in touch with you at?
Yeah, it's the-studio-reykjavik.com.
Okay, so it's the-studio at Reg. I can never spell out Reykjavik. When you type that?
Wait, hold on. What I'll do is I'll
Yeah. Just put the and I'll bring it up on your site. And that's a good way for everybody to get in touch with you. Because you're out there. Like I just noticed you put up a book and on iTunes. You do quite a lot.
Yeah, I wrote 3 books. They're about finance. Some of it's economics, some of it's quant finance type stuff. It was my pre-dissertation work that I published so far.
Right.
Okay, here's the website.
Okay, here, let me just pull it up. Here. I'm just still new to. Hang on here. Oh, okay, I got it. Okay, so this is Paul's site. And then I'll put that in the chat mode. So hopefully, Gary, if you want to get in touch, let me know if you have access to the chat box for Paul's site, and then they can get in touch with you, right, Paul, through this?
Yeah, they can just go scroll down to the bottom, and they can there's a contact.
Yeah. So yeah, I see it. Contact. There you go on the bottom right. Yeah. So Gary says he's got it. Yeah, because I know FPGA is a good way to go. down that path. But through the MATLAB and Simulink, it's not a cheap option. I mean, it's very, very expensive. You're looking at 50, I don't know, 10, 15 grand just for the licensing.
Right, but the thing is, we were talking about this, Brian. There's being in New York and being close to VCs and the investment banking world, and in the proprietary trading or the private equity. Yep. You have a good system. If you have something unique that no one has, you can get a lot of money.
Oh, I know.
To fund. And, and the things that we're talking about, it's not something that can be done by one person. It can only be done if you really want to do it at a really high level. It's a combination of some mathematicians, some statisticians, some coders, some hardware guys. It's a team effort, really.
Oh, for sure.
But if something was built up in like an alpha build, as you would say it, and presented, to some VCs, you're talking about a lot of money that could be raised. Because no one else has it, and you can tell in this conversation that there's little bits and pieces that everyone has. That something special could come out of this.
Oh yeah, I mean, I know Kuz fully agrees in the chat mode. Just so everybody knows, here in Canada, I'm going to be part of an event where they're both the federal and the province are looking. They're putting on a networking event for VCs and pitches of different businesses and whatnot. So I threw my hat in the ring to see what would come out of it. If something comes out and I get funding for something, I'm all for it. But so I know Canada's got that as well. That's going to happen in a couple of weeks. So I might try to get something going as well. So we can talk offline about that. Definitely, Paul.
All right.
Anybody else got any questions? It sounds like this is a really good webinar tonight. And it's good that everyone's helping each other out. Maybe, here, I'm going to bring in Kuz to see what he says about. Kuz, you out there? I know you're muted. Oh, no, I see he's muted. Maybe he can talk. I don't know. But he is...
I can talk.
Yeah, why don't you talk about the Tesla boards and the FPGA boards? I know we talked about it. You're pretty well in depth in all that. You're a former hardware engineer, right?
Yes.
When do you tell them about the current way to expedite processes for a system, like from something like that, what Paul talked about? Specifically in the world of let's say the GPU with the Tesla boards.
Yeah, I think the best thing is to watch the NVIDIA website yourself. But the thing is that for a lot of computations, you can use the GPUs very well to what I think Paul said already. Not amplify, but speed up the calculation by a factor of 10 or 12, 15, or even more. If you look at the examples they give. So this is a parallel processing of many computations where a CPU is not so handy, but the GPU can do it, and they give in MATLAB and also in NVIDIA in CUDA. I think they give they have the software to do so.
Yeah.
Of course, you have to build it in, but it is somewhere these GPUs. It is somewhere between FPGA and normal computing, somewhere in between. I mean,
are you
FPGA?
Go ahead.
FPGA, you have to. It's programmable hardware. That's the fastest. With this, you are somewhere in between. You're faster than normal computing, but not as fast as FPGA, but you can reprogram it on the fly. This is if you wish. So it just depends also on what you want to have and what your goal is, what you want to achieve.
Yeah, I've also put up 2 links in the chat. Obviously the NVIDIA Tesla link, as well as I've got a couple of videos. I've just fooled around with CUDA myself in C++. CUDA is a library. I mean, it's proprietary from NVIDIA, so it's not like open source or anything, but there are some open source libraries that you could use depending upon whatever platform you're using. But yeah, these are all potential options to go with. But if you're going to ask me, I still think that MATLAB's the easier way to go when you're entering in the world of FPGA or CUDA or GPU.
Now you could, I think you can combine MATLAB with CUDA, I believe.
Yep.
To get to the result. So it's not mutual exclusive, but it helps each other. So
yeah.
And that it is not open source CUDA, yeah. Then you can simply use it, and build it in.
Yeah, but coding it up can be not a fun process. So, I don't know.
Okay, we need another specialist in this. But
yeah. That's where the MATLAB comes in, hopefully. I mean, if money was no object, yeah, I'd definitely go down the MATLAB route. It's just quicker to market with MATLAB versus anything else I've seen. I don't know. That was a really good one. Anybody else got any questions? Because we're already coming up to 8:30. It's a good almost hour and a half. Really good webinar, man. Paul, you got anything you'd like to add, or?
No, I'll add some more stuff next webinar.
Okay, yeah, I'm gonna probably definitely do it next week. Let me ask everybody: is Tuesday or Wednesday better for you guys? Because we're having our meetup here in Toronto, like our Din, our social one locally here in Toronto. I know Sandra's gonna be on that one. She's still out there. No, she's already left. Tuesday, anybody? Tuesday, Wednesday, what works for you guys? Let's do a poll. I want to get as many of you guys. We want to build momentum from this. Anybody okay for both Tuesday or Wednesday? Conflicts with either or? Okay, we got one Tuesday, we got a Wednesday, one each. Who's is flexible either way? What about you, Paul? You available either day?
Either day is fine.
Okay. Why don't we do it Tuesday or Wednesday? We got a Wednesday. Looks like it's Wednesday. Okay, well, we could do Wednesday. Anybody else got any comments or questions for tonight? Anything? Because, I don't know, people do drop off about an hour and a half, or at least an hour. Anybody? I guess not. Do you want to wrap it up then for tonight?
Yeah, let's just wrap it up, and people can start thinking about what they might want to talk about next week.
Yeah. And I'm assuming you still want to do a presentation, right, Paul, or something?
Yeah. Yeah. Maybe I could just introduce the idea to the ones that are online now. The theoretical framework that I come from with my PhD studies is chaos theory.
Yeah.
And that's tied into Dr. Taleb and the black swan idea, and that's why I'm very interested in this kind of field.
Right.
So I was kind of thinking about maybe doing some sort of introduction of what chaos is and how that may parlay to trading and right. and systems, complexity science, and just approach it at a little bit more of a philosophical level.
Right.
And then if people like it, then maybe we could go into a little bit more detail on why the Levy process works, why the Black-Scholes doesn't work,
right.
and go into a little bit more detailed stuff. But I think that these webinars, many different types of people are have different types of backgrounds. Some are very strong in coding.
Yeah.
Some, are maybe traders or are portfolio managers, and they may not be as strong in the coding. Some people may be authors of books or whatever.
Right.
But I think that if we have a little bit of a mixture of code, theoretical, frameworks, maybe market insight, something neat would come out of it. Here, I learned a lot about just hardware.
Yeah, that's what it's about. Go ahead, Paul.
Yeah, so I was just, maybe something that was a little bit more philosophical, of framework of, what is chaos theory, and how does the Black Swan or Dragon Kings really relate to trading?
Right.
So that was kind of what I was thinking.
Oh,
Maybe
yeah.
people would be interested in that, but that was what I was thinking.
Yeah, I mean,
at least the first one.
I do know this as a fact. If we have a formal presentation of something, we do get bigger crowds of maybe, I think Ernie's brought out 35, 40 people. And I think we could easily exceed that because we had a limit on how many people we could bring in. But with this new service I have, it can accommodate up to 100 people. So I know when people see something they like, they'll come out in droves, especially after meetups.
Okay, so I'll build something up. I'll shoot you off a prototype of the presentation.
Yeah.
See get your insight on it, and then we'll maybe advertise it through the social networks.
Yeah, and that's what I typically do. So if anybody else wants to present anything, by all means, that's what this group is about, and to promote it and get it bigger. If it gets bigger numbers, obviously I'll scale up the service as well as needed. So it's not a big deal at my end. And I know I've had a couple of people want to present some other ideas as well. And it's always pertaining to your schedule as well. So, yeah. But for next week, we can definitely do something if you want to do it then or whenever you want. I'm ready to do it anytime. We can definitely do it, looks like next Wednesday night. Anybody else got any questions or concerns or anything that want to chime in? If not, then we'll just call it a night. But this is a really, really, really informative webinar. Thanks a lot for everybody's input. I really appreciate it. I mean, it's really valuable. It just enables people to come together with, as Paul says, different talents, and then try to come up with different solutions. So that's what makes this kind of group really valuable. Anybody else got any questions or concerns at all? A lot of people said thank you very much for coming out. This was an awesome night. Thanks a lot, Paul, for giving your insight as well. And Kuz.
Yeah, no problem.
And everybody's welcome as well. You know what I mean? So if you want, we'll call it a night. And come on to the next one. I'll post it through the meetup as well, okay? I'm going to try and make it easier where I don't have to get people to opt in with their emails and stuff as well. I think I found a way to get around that. I'm working with GoToWebinar around that. I think there's a way to do it. So anybody else want to do any final sayings or statements or anything for tonight? I guess not. Okay. I guess we can call it a wrap then. Thanks a lot for coming out. Thanks a lot, Paul, Dan, Mr. NYC, Kuz, for your input. You guys are really helpful to get through the night. I'm not a mathematician, as you know, but I do my best. All right, so I'll call it a night. Thanks again for coming out.
Thank you.
Oh, thank you. Thanks. And I'll stop the recording. Talk to you hopefully next week.